Microsoft stock down 33% since all-time highs back in fall 2025 because of the massive AI CapEx concerns. Investors are questioning whether the AI investment is worth the potential returns. First, let's look at Microsoft stock price action. Microsoft is currently at a previous support level of 370 and reached oversold territories on the RSI. Historically, Microsoft and Apple are correlated, meaning Microsoft typically follows Apple's price action and vice versa. This means Apple and Microsoft are good stock couples for pairs trading. You can check out my Python coding tutorial on the channel and see the code on udomo.com. This pairs trading algorithm shows Microsoft is in buying territory as Microsoft diverges away from Apple. The z-score spread measures how many standard deviations the price action between Microsoft and Apple has moved away from the historic mean. A z-score of 0 means the two stocks are trading exactly in line with each other compared to historic relationships. The spread has moved to 2 standard deviations below the mean, a statistically unusual divergence. This pairs trading model has overall outperformed Apple and Microsoft from 2024 to April 2026. Of course, the pairs trading model can make mistakes, and historical performance does not always indicate future outcomes. Now let's get into the fundamentals, which look pretty good for Microsoft's recent earnings. Revenue was $81.3 billion, increased 17%, beating estimates of $80 billion. Azure and other cloud services revenue increased 39%, an acceleration from the previous quarter pace and ahead of analyst forecasts of 37%. Microsoft Cloud revenue was $51.5 billion and increased 26%, and commercial remaining performance obligations increased 110% to $625 billion. This obligation segment grew faster than revenue at 17%, which shows expanding margins on the core business. The biggest disadvantages for Microsoft is the massive AI CapEx and customer concentration. There's soaring AI capital expenditure with ROI questions. CapEx surged to $37.5 billion, raising investor questioning on ROI and allocation strategy. Management noted that capital expenditures are expected to decrease on the sequential basis in quarter 3, but raising memory prices could impact both CapEx and cloud gross margins going forward. Their large concern is that 45% of these backlog obligations are concentrated in one customer, OpenAI. Microsoft disclosed that its remaining performance obligations, RPOs, more than doubled year over year to $625 billion, but nearly 45% of those came from OpenAI. To put that in plain terms, approximately 45% of Microsoft's contracted backlogs is tied to one customer. This is even more concerning because OpenAI burns cash like no tomorrow. For example, ChatGPT invested billions into developing Sora, which was intended to be the AI version of TikTok, where users could generate and watch AI-generated videos and scroll for that sweet AI slop entertainment. But they pulled the plug on the entire project. So investors are repricing Microsoft. Microsoft was once viewed in the eyes of investors as a safe company with predictable revenue because they are embedded deeply in business. Majority of businesses and governments use Microsoft Office products, and these companies typically become Microsoft shops, where additional services like Azure and cloud are Microsoft-based because it is the easiest to integrate with the existing business process. This deep integration is still true, and Microsoft stock may benefit from this deep integration in the long run. But investors look at the exponential CapEx along with the OpenAI concentration and are now repricing Microsoft because investors are pricing in this ambiguity. At udomo.com, we can easily visualize Microsoft's financials and see whether this company is fundamentally strong and trading at discount. The annual top-line fundamentals have been growing exponentially for Microsoft since 2019, with revenue reaching $375 billion in 2025 and net income reaching $123 billion. Growth here looks good. You can also see Microsoft's balance sheet. Here's where we see the CapEx start to impact the balance sheet as cash declines and liabilities start to increase. Finally, we have the free cash flow chart. This shows us how much of operating cash flow is retained compared to capital expenditure. Even through CapEx is increasing, free cash flow is holding steady because of increasing operating cash flows. Next, we see Microsoft's valuation relative to itself. We see that Microsoft historically, on average, trades at a price to sales of 14. Microsoft is currently trading at a price to sales of 8. This means that on average, investors are willing to pay $14 for every dollar Microsoft generates in revenue. However, investors now are only willing to pay $8 per dollar in revenue generated because of the uncertainty. But Microsoft's financials are growing stronger compared to the industry. This is where Microsoft truly shines, and it's super easy to compare Microsoft's financials to the industry average on udomo.com. This chart shows us the annual revenue, gross profit, and net income growth of Microsoft year over year compared to the software industry average. Here we see that Microsoft grew revenue 36% in 2025, but the industry average only grew 13%. This means that Microsoft is growing faster than other software companies. So what do I personally think about Microsoft stock? This video and content on Udomo are not financial advice. I'm only sharing with you my personal thoughts and personal financial journey. Personally, I like Microsoft. I think this time of uncertainty has created an opportunity for long-term positions to enter this stock. Historically, Microsoft and Apple have correlated price action. This model estimates that either Apple will decline, Microsoft will increase back, or a little bit of both. Microsoft products are also super sticky. Once someone, especially a business, uses them, it's super hard to remove that product from their business process. The large AI spend, OpenAI customer concentration, and lack of AI superiority are points of concern for Microsoft investors. However, I like the discount in valuation that may appreciate in a long enough time horizon. I hope you enjoyed this video on Microsoft stock. Like if you enjoyed the analysis, subscribe to the channel, check out udomo.com for stock analysis tools and data API solutions. Thank you for your support, and I will see you all in the next one.